This is Trudy with Howard Tax Prep LLC, and I wanted to briefly go over what you need to do to reconstruct your mileage when you have used a vehicle in your business, but you have not been using an application like Mile IQ to track your mileage. So the first screen that you see is a reconstruction training that the IRS has for paid tax preparers, but you also can use this book or this training, this PDF, to reconstruct your own records. So here at Howard Tax Prep LLC, oftentimes we have clients that have not been tracking their mileage, but they are entitled to a mileage deduction because mileage includes the cost of your car, so depreciation, oil changes, repairs, tires, anything like that is already included in a per mile um, amount and deduction. Now, you can also deduct actual cost, which would be, let's say, your lease payment or depreciation based on the cost of the vehicle, your actual gas costs, stickers, plates, repairs, interest that you're paying on your car note, etc. However, in either case, you will need to have the amount of mileage tracked. So you need to track not only your business miles, but you also want to track your personal miles because that is what the IRS will ask for. Well, what were the business miles and what were your personal miles if this is a vehicle that can be used for business and personal usage? So, how do we reconstruct your mileage and what steps should we take in order to make sure that we are accurately reporting an expense that you are entitled to? So, the very first thing we can use appointment books or calendars. I personally use Google Calendar so I can go back to 2022 and 2021 and see if I had an appointment outside of my home to meet a client at one of my office locations, then I can do the mileage from my home because I have a home office to one of the offices, the retail locations that we occasionally meet clients in. So the appointment book, per the Schedule C and Record Reconstruction Training from the IRS, says that an appointment book could be used to develop where a taxpayer traveled to provide services and how many trips. A count of how many people were provided services, a count of how many of each type of service was rendered. For example, how many haircut appointments, how many manicure appointments, etc. And then using summary counts of the number of each kind of service rendered, the taxpayer could apply an average or standard cost to come up with an estimate of total receipts. The number of trips made and the locations traveled to could be combined with online map tools data to support total business miles driven. So then we have here the online map tools, and the online map tools can be used to reconstruct mileage calculations. You also have IRS standard allowances. Now, a standard allowance is where the IRS just says here, this is the flat rate that you can deduct if you are in this industry. So per diem or per day expenses for truck drivers, but this is not for regional, local, you know, in town drivers. Per diem only applies to over the road drivers, so that's important. Okay. Any checkbook, canceled checks, bank statements. So these documents can be used to gain information about expenses incurred and what types of services were performed for clients. Using a summary again, you can apply an average or standard cost to come up with an estimate of total cost and receipts. So, for example, uh, let's say in my nobody that I know still writes checks. I mean, very rarely is anyone writing a check. So the IRS really needs to update this. However, most people do have a bank statement. So let's say on my bank statement, I went to Staples and I have that charge there. I can say, well, I'm a tax preparer. I had to go here to pick up paper. Here's proof that I am getting paper for my clients. Now, with the IRS, they say that you can reconstruct your expenses this way if you lost them or you don't have anything. However, by the same token, the IRS will tell you that a bank statement or a canceled check is not proof that the expense was a business expense. Now, of course, Staples and Office Depot, that's simple. Usually they will give you that. But let's say this was a Walmart expense. As we know, Walmart offers various items. So you could come with a bank statement and say, oh, here's my Walmart card cost that proves that I had the business expense, and it does not. So that is why you want to keep your receipts. You can scan them and email them to yourself. You can pay for a service that allows you to store your receipts, but you always want to keep the receipts because the receipts itemize what you actually purchased, not that you had just a charge. And now, list of regular clients. Using a list of regular clients, a taxpayer could reconstruct regular expenses from that particular information. However, most of my business owners don't have regular clients. I don't really deal with too many barbers. I have hairdressers, but they get a few um, regular clients. However, most of their clients are newcomers. So when we're reconstructing for them, we're going to use that appointment book or their calendar. So I want to go back to the online map tools to reconstruct mileage calculations. So MapQuest is the best that I've seen. So here we're going to go mapquest.com/directions. So let's say I lived at 2300 Jackson Street in Gary, Indiana. And I'm going to my office at 1136 South Delano Court West in Chicago. So that is 31 miles. If I take I 90, if I take Route 2, which usually I would, I 90 into 912, that's 34 miles. And then Route 3 gives me 36 miles. Now, uh, MapQuest now has this what the IRS reimbursement is of $23.89. And this can be deceiving because they're not going to give you $23.89 in cash. You're going to be able to deduct $23.89 from your overall income, which just lowers the amount that you're taxed on. This is not a dollar for dollar credit to lower the tax, this just lowers your taxable income. So let's go with Route 3. That was 36 miles. So I would go ahead and take that 36 miles, and that would be my deduction. Now, I just happen to know that this is round trip because I know it's not one way. But with MapQuest, you can select one way or round trip. Now, I also want to show you what the IRS expects you to do when you're tracking mileage. And IRS publication 463, we have page 26. And this is the daily business mileage and expense log. So here we can see they want to know the date. So that's self explanatory. What city or town were you going to? Now, again, this is deceiving as well because if I told the IRS, well, I leave Dalton, Illinois, and I go to Gary, Indiana, they would say, well, how do we know what you did in Gary? We need more proof. So the true information that should be here would be the address. So it will be the date, and then I'm going to 2300 Jackson Street. My business purposes is for tax preparation. My odometer reading. I know most people do not get in their car and look at the odometer. If you do, if you're one of those people, hey, that's great for you. But most of us are not doing that. So let's just say, though, my odometer is probably 84,000. And from Gary to Dalton, when I stopped, my odometer had 84,023 miles. So here, the miles for this trip will be 23. And then I would just put RT for round trip. So 23 would be 46. And then your expenses. How much did I spend in gas, oils, tolls, etc.? What was the total amount? Now, this is foolish because nobody, well, I won't say nobody, but it's difficult to know exactly how much gas you spent from point A to point B. Most people just know what they fill up, how many miles per gallon they have, and then you can divide your miles per gallon, by however many miles. So if a person literally wanted to say, well, I drove 23 miles today and 23 miles, I get, let's say 500 miles to a gallon. So I'm going to divide that mileage into my gallon cost. I'm not going to do all of that. What I'm going to do is at the end of the year, I'm going to add up all of my miles, and then I'm going to take a percentage from my business miles versus my personal miles. So if I've used my car 20% for personal usage and 80% for business, I would take 80% of the gas, oil, and tolls, and I would do my annual basis. There's no way possible, or I should say, there is a way, but it's ridiculous to try to figure out how much gas and oil you spent per trip based on tiny miles on a daily basis. However, this is where Mile IQ comes in moving forward. So remember, I am showing you this option to show you how to reconstruct your mileage. So again, we're going to go to the calendar, any of your old appointment books. You may have to go through text messages, emails, however you get your business if you're not using it in a calendar. Then you're going to go to Mile IQ. You're going to put in your starting point and your ending destination. And then you're going to make sure that everything is here. So, business purpose, start, stop, miles, type gas. Because what you cannot do is give the IRS a calendar sheet like this and put 23 miles, sales, 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 23, 23, because the IRS will definitely reject that and say, well, we don't know who you went to meet. Your mileage looks the same for every single day. And they have definitely thrown out mileage. They love to throw out mileage because most people are not detailed enough to keep up with their mileage log. And you don't have to be because there's programs for $6 a month called Mile IQ. Okay, so again, download that, but in the meantime, use this to reconstruct your mileage. Now, you may not want to go through 30 days, 31 days for of 12 months trying to figure out every day how much you drove, right? So, there is something called sampling from the IRS. If you look at the very bottom of this page, this is again publication 463. We're on page 25. At the bottom, it says sampling. You can keep an adequate record for parts of a tax year and use that record to prove the amount of business or investment used for the entire year. You must demonstrate by other evidence that the periods for which an adequate record is kept are representative of the use throughout the tax year. So, for example, you use your car to visit the offices of clients, you're meeting with suppliers and other subcontractors, you pick up and deliver items to clients. Think of somebody that's doing fix and flips, right? They have to go before the inspection. Sometimes they may have to go to Home Depot, they have to go meet with brokers, etc., right? So there is no other business use of the car, but you and your family use the car for personal purposes. You keep adequate records during the first week of each month that show that 75% of the use of the car is for business. Invoices and bills show that your business use continues at the same rate during the later weeks of each month. I'm sorry, the later weeks of each month. Your weekly records are representative of the use of the car each month and are sufficient evidence to support the percentage of business use for the year. So what are they saying? So not only do I go back and I have my mileage for the week, but I also have invoices and proof of expenses, payments to uh, the fix and flip company, the hard money lenders, different things like that, that my business is continuing at the same rate. If you're a pastor, right, and weekly you're going back and forth to the churches and the hospitals to pray, you're going to conventions and different things like that, as long as you have invoices and bills and emails to show that your business, you kind of doing the same thing. Once a week you're going to the church, the other part of the week you're going to volunteer at the food pantry, what have you. As long as you have those records, then you can use the first week of each month to represent the entire monthly usage of your vehicle. Now, all of this sounds good, but if you'll notice, everything I said, these are publications, right? So, one thing you need to know about the IRS is the IRS will say, oh, well, that's a publication. A publication is not law. So the IRS has laws and there's a code. So you'll hear people say, oh, but it's not in the code, or oh, that's not law, that's not statutory, that's not this, that's not that. So if you have a difficult revenue officer may say, well, you're supposed to have these records done at the exact same time that you take the trip, because that's what you're supposed to do with mileage. We're not supposed to go back a year later trying to figure out where we went and what business usage. We're supposed to track our mileage and that information that we went here, the business purpose, my odometer reader starting and stop at the time that the expense is done. So if you do use this option, know that the IRS can come back and try to argue you on this point. However, if they do, then you just argue back with, hey, I relied on your information. I followed the steps. This is an IRS publication, etc. And sometimes it will work and sometimes it won't. But don't just not take your expenses if you know that you truly had business expenses and business mileage to take. If you need any assistance, we do offer assistance with these things at a paid rate, obviously. Or if you have any additional questions, you can book a free 15-minute consultation with us. Sometimes you may need to book a half-hour paid consultation or a 1-hour paid consultation. But hopefully this video is going to help you reconstruct your business mileage and to know exactly what the IRS is going to be looking for if you were to be audited, if you were audited. Thank you for listening and enjoy your day.